David, great to see you here. Now, there was one analyst, Laura Martin of Needham, who says that the injunction has a 75% chance of killing off Venu. What do you think?
Well, I think, from my perspective, the most important thing is that the consumer is the big winner today. The joint venture attempted to deprive consumers of choice and affordability. It attempted to eliminate competition and manipulate pricing. And I think the evidence was quite clear, given that the bar is so high, and we're just happy the judge has agreed with us.
So it's likely that Venu will make its case again before the court. What are you going to be doing before then? Because it's not clear how long this injunction will last.
Well, we don't have a date yet set for the trial, which could be in 2025 or 2026. Fubo today is focused on the fall sports calendar. We're not focused on any potential appeal. Pun intended. Ball is in their court. So we'll continue to focus on our business and continue to achieve profitability as we have forecasted in 2025.
I am curious, David, too, about the structure of that Venu deal. There was some discussion, I guess, based on the reporting coming out of the hearings that led up to the ruling. This idea that they were asking, I don't know if it was specifically you, but they were asking some of the rivals that they would, in addition, if they wanted the sports programming, they also had to take additional programming as well. Is that true?
Yeah, that's correct. I think one of the arguments that we were attempting to make is that not only were there excessive above market rates that we were dealing with, excessive penetration rates, which is the number of subscribers that gain access or have access to each of the networks, which obviously comes at a higher cost, but it's also the bundling of unwanted channels to access must-have sports programming. Those are the sort of key elements of the trial. And again, we believe that we're able to provide the judge with sufficient and credible evidence for her to judge in our favor.
I'm just going to play devil's advocate here for a second, David, because when we look at sort of the legacy cable TV bundles, there was sort of baked into that almost a certain degree of exclusivity, a certain degree of you come to us or you don't get it at all. And obviously they're trying to extend that to a certain extent to the streaming side. Right. But if that was okay then, and I'm just talking legally okay, I know consumers hated it, but if that was okay then, why is this not okay now, if it's simply because it's online?
Well, it's not that simple, and it's not because it's online. The problem is that we have attempted to put together a skinny bundle of channels to offer to consumers since 2015. And at every turn, we have been denied the opportunity to do that. And in this last negotiation with Warner Brothers Discovery, we asked for the same terms as this joint venture was able to receive. And obviously, we don't have a deal with Turner TBS, nor do we have a deal with Warner Brothers Discovery. So really, this is about keeping it for themselves and not creating enough access across the ecosystem.
Just to be clear, David, why didn't they take, I mean, if you said you offered the terms that they were asking for, do you have any sense that they articulate why they didn't take it?
Well, again, I think you said it very well. I mean, they sell the complete bundle. They want to package in channels that are difficult for them to sell individually or separate from sports programming. And I believe that there's been sufficient evidence, and perhaps some of that information has been unsealed, that they feel that they have significant leverage over a distributor when they're able to package together the sports programming.
So give us a sense of what you're thinking in terms of what Fubo does next, its next iteration. Is there a future in which Fubo only offers perhaps a sports-only package as well?
Yeah, well, I think the key word is as well. I think the idea for us is we're continuing to focus on our super aggregation strategy. We want to be able to attract customers at different price points across the demand curve, everything from free services all the way up. I'll call it the fat bundle, as we called it throughout the trial, which is a more expensive, $80, $85 plus package. But there's a whole set of content packages that we feel that we can offer from zero to the fat bundle that we think consumers will really take advantage of. And they may take advantage of it at different times throughout the year, given what premium programming is available on a seasonal basis. So there's a huge opportunity here, and we're not in the App Store business, we're in the super aggregation business.
Have you had any talks, David, about adding, say, Disney Plus or Max to your streaming offering, to those fatter bundles or fat bundles, or is that pretty much a non-starter right now?
Well, we've obviously have asked in the past. I'm sure other distributors have probably asked for that as well. At this point in time, I think that they were not ready to do that, and our backs were against the wall. And in a situation where we feel that the U.S. consumer will suffer from a lack of competition and affordability, because over time, I'm sure you've seen this, prices continue to move higher. Frankly, the Disney Plus product, I think, has doubled in price over the last 4 years. So there's a clear example and many examples of prices going higher when there's just not enough distribution.